Very good afternoon, everyone. Welcome to uLaw CPD webinar. Topic for today's session is Trust and Gender Reconciliation Demystified. Thank you all for joining in on time, and I hope everyone is able to hear me well. For the ones who are not able to hear me well, maybe has some audio quality issues, or you feel that my voice is too low, try logging in using the phone audio. It might sound better. I'm currently on the phone audio as well. I hope I'm able to be loud enough. Tom, try logging in through the phone audio. If you're on the computer audio, switch to the phone audio. You might be able to hear me better. Let me know. Anyway, thank you. All right. Seeing more folks joining in, should be able to get started in a minute. In the meantime, let's quickly go over today's agenda. As you all can see, the topic is about trust and gender reconciliation, and how do we crack the process, get through understanding what are some things that needs to be done in order to be able to complete the reconciliation smoothly. Keeping in mind both trust and gender are part of the compliance requirement. It's not just the trust alone. Definitely gender plays a role too. General accounting, even though not explicitly said anywhere, or sometimes misled, saying that trust reconciliations are part of the compliance, but general is also part of the compliance requirement, and your monthly compliances, in fact. So if you're someone who only focuses on trust, please make sure that you start doing your general reconciliations as well, because general is, even though not as equally important as trust is, because sometimes it depends on, firm to firm, some people might not have trust. And at that time, if you're being audited, what the auditor will look into is obviously your general account, because your general account will carry a lot of your client payments and other transactions, disbursements and receipts, payments, etc., overall office expenses and stuff. So at that point in time, general reconciliation is really important, because you don't have trust. The general will serve as the base record for the audit. So in scenarios like that, for an example, or even if you have trust, you might be asked to pull out the general reconciliation for a specific month. You might, especially when if it's a spot audit or practice audit, you don't know what you might be asked for at that time, right? Sometimes the auditors ask for a specific ledger copy of a client who might have paid into the general account. And if you have not recorded some details, it would not show. And while you're recording the information, you might as well hit the reconciliation button to complete. So that's why it says, if you look at the topic, it clearly says that should it take 10 minutes or 3 hours. Now, if you're someone who due diligently enters the data into the respective books of accounts, then the reconciliation process is pretty straightforward and simple. For someone like you, you would not be spending more than a few minutes, or maybe max an hour for an account. But for someone who has never entered stuff into, data into the books of accounts, saying that this client paid me a retainer, or this client paid me client payment, which is into the general account after you raise an invoice. If you don't, or if you miss out on recording such information, it could take more time to reconcile your books. So that's why it says whether it takes 10 minutes or 3 hours. It totally depends on, the method that you adopt for the reconciliation process. If you are someone who enters data on a regular basis, if you're someone who reconciles every week, now there are people who would like to close their books on a weekly basis. They would record their receipts, payments, expenses, office expenses, and goes on like that, right? And some of them would do it bi-weekly. Some of them would do monthly. Obviously, someone who does it with a larger volume and a longer gap between one time the other time will take hours to complete the reconciliation. But someone who has a smaller volume of data and also does it on a regular basis, right? You have a periodic data entry system that you would do on a weekly basis, monthly basis. Some people do it on a daily basis, as in when the event occurs. For them, reconciliation is a very simple process of hitting a reconciliation button on the screen. So just that it varies from firm to firm, size of the firm, practice area, quite a lot of things. Some practice areas doesn't have disbursements at all. Some practice areas includes a lot of disbursements to be recorded. So you will have a lot of items to check. So it totally depends on area to area practice and also the firm size. Quite a lot of factors contribute to the reconciliation. That's why actually a few clients of ours comes and asks us that, hey, how much would it cost for a bookkeeping, right? But sometimes we're not able to tell that upfront. What I tell clients is that give us a couple months. From what I see from the bank statement, it kind of looks like, somewhere that we would take 2 to 3 hours a month, 3 to 4 hours a month. But we're not talking about a single bank account, right? We're talking about trust, we're talking about general, we're talking about credit card. But why credit card reconciliation? Obviously, if you have credit card, which is business credit card, and you have made disbursements, you've made office expenses, you've paid the credit card from your general account. You might want to record, you should be, not might, you should be recording all those transactions under the general account and respective credit card accounts, and then reconcile it month on month because your credit card is also part of your general reconciliation. Right? So 3 bank accounts, reconciling them from period to period takes a bit time, but if you follow these steps due diligently, you would be able to get to it pretty quick than your usual time. Now, starting off with what is a reconciliation? Where do we begin? Now, reconciliation is very straightforward process. It is something that is only a click away. Okay. Sorry, I'm going to pause a moment. I think someone is trying to log in. I hate to do this, but I'm so sorry. I would like them to hear my voice a bit to understand how this works, because just staring at the screen is not going to help. Let's give them a minute. Thank you, everyone, for patiently waiting and hearing out. It's not easy on a Friday afternoon, but this is the time we've picked up because many of them like to unwind on a Friday afternoon. It's easier this way because you're also getting some credits, and why not? So let's give them a minute to join. In the meantime, understanding what is needed to kickstart the reconciliation process. So you first of all need an accounting system in place. Now, choosing which one to adopt is up to you, and maybe depending upon your firm, depending upon your area of practice, depending upon the size of the firm, right? Like you want to do the volume-based one, you have a lot of stuff to do. Then I know that spreadsheets, manual data entry, those are olden day stuff. I know that there are people still who follow spreadsheet, no harm. I respect that. But it's just, I feel it's a bit strenuous. It's time consuming for nothing. While the other 2 options are general accounting software and legal accounting software. Why not general accounting, even though it's mentioned there? What is the difference between a legal accounting and a general accounting? Definitely is more like QuickBooks kind of software that does only maybe records of your invoices, you're able to raise the invoice, you're able to collect the payments, you're able to provide a receipt. But from a lawyer or a paralegal standpoint, a legal accounting software does more than just accounting, right? Number one, something like uLaw would allow you to intake your client, complete the dockets, and then enter the docket invoice tables. You would be able to enter the disbursements, and then you would be able to do the reconciliations at the same time. And all of this including law society compliance at each and every stage of it, right? Like, for example, you're doing your client intake, you would do the conflict check parallelly. When you're opening a matter, you would do retainer and retainer letters and other things parallelly. When you're recording the amounts into the books of accounts, which is in the matter, saying that this client, you recorded the docket, this client paid for the invoice, and then it all goes into the matter parallelly into the accounting system, allowing you to not only just raise the invoice, but also do the accounting and do the reconciliations and do the law society compliance all parallelly. Now, that is the very strong recommendation why legal professionals adopt this particular method in spite of, the rest of them being low cost and all. Now, there's a difference, thin line of difference between low cost and cost effective. Obviously, the other four are low cost, and this one is cost effective because you're able to do several things at the same time and still being compliant. So the least of all at this point would be your, the concern of whether am I compliant. So at the most, you're spending a few dollars more, but end of it, you're being compliant. So think about software that will do multiple things, hassle-free, and, cost effective and all in one, right? Like you have to be able to intake a client and do the docketing, do the conflict checks, do the retainer letters, do the receipts, do the invoices, do the disbursements, quote forms, whatnot. So now, obviously, while you're getting into the process of reconciliation, these happens parallelly. So the effort that you put in is much simpler and lesser in comparison to the other methods that we discussed. So that is why when you select a legal practice management software or a legal accounting software, it is important that you check that you're able to do all of this under one roof. Right? So you don't go for add-ons, you don't go for an additional software. You try to do this all under one roof to achieve the time. Now, obviously, this could take 5 minutes, this could take 50 minutes, this could take 2 hours, but it depends not just on volume, but the method that you adopt. Speaking of which, trust reconciliation is only a 4-step process, starting with your balance as per the bank statement on the top. You reduce all your outstanding checks because they're not deposited into the bank yet, or rather it's not cleared in the bank. It's not deposited by the person who was cleared, rather was issued to, if I can put it that way. And then you add all your outstanding deposits because you haven't found time to go and deposit them in the bank, which you will eventually do. So when it's done, then it will match to a reconciled mixed trust balance. Now, if it's a proper legal accounting software, when you generate the reconciliation report, it gives you additional information such as what are the outstanding checks, what are the outstanding deposits, what is the balance lying in trust, and the breakup of that. Like that's called as trust comparison with the trust listing report. Now, that particular report will give you idea of what are the balances of the respective clients that are having balance in trust. Just give it a minute. Yeah. Sorry. Viewer number 15, can you hear us? I hope you can. I hope rest of you can hear me too. Okay. Quickly moving on to reconciliation for general account. Now, very similar to that of trust, but only thing that you would not be seeing in general is anything similar to that of trust listing. Now, why do we have a trust listing? And the other one is the bank error. Now, if you look closely here, there's a line item that says plus bank error. The bank error, again, could be in negative or positive bank error. Negative bank error meaning you have overdrawn something from the trust, which is not a good sign. and you are required to put the money back into the trust account within the same month, right? Because if you put it within the same month, it's not going to affect your trust account. Whereas if you put it in the next month, it's definitely going to affect your trust account. You know that it's like a little bank fee that you would see lying in your trust account, while it should not be sitting in your trust account. It should be out of your general account. So you're given a standard instruction to your bank saying that they don't take the money out of the trust, they take the money out of the general. Now, similarly, you could have something that is there, uh, excess transferred from general to the trust. For some reason, you've transferred more money back into the trust, then that is called as a positive bank error. Positive bank error is still okay because it's your money that's lying in trust. You've not taken any other client's money and misused or something of that sort. That's the understanding, right? Um, so positive bank error is still okay. So that is the reason why you are seeing that it says plus or minus bank error. Plus bank error it could be positive or negative, and it will accordingly adjust to the cleared bank error. And once it's fixed, it will be shown in the bank account, whether it's a addition or deletion, and then respectively, it's going to show up here. And in comparison to trust reconciliation, general would not have any concept of bank error because general is a very straightforward reconciliation where you take a closing balance from the bank statement, put it into the account, and then you would enter the withdrawals, any outstanding withdrawals, you will deduct. Any outstanding deposits, you will add, because outstanding withdrawals are nothing but any checks that have been issued to the vendor or any refunds that was made and that's not yet in there, right? And then thirdly, you have, and that would arrive at reconciled trust balance. Okay. Now, obviously, you have to ensure that your balance as per bank statement is entered here respectively. You're able to see all the balances in the bank or your general balance and that you're entering it over here. And you're able to also look into the activities that happens in the general account and confirm that all the transactions in there and here are cleared respectively. You're able to clear all the trust transfers that you see in here as deposits, all the client payments that you again see in here as deposits. Withdrawals, I've most likely seen any office expenses, any disbursements on clients' accounts, any payment, bank transfers, that would be there, right? And yeah, that's mostly it. And then you arrive at the reconciliation button. Once you've cleared them all, you'd be outstanding is left out and you'd arrive at the reconciliation. So this is typically how a reconciliation screen looks in the uLawPractice account. Number one, you get to enter the date for which you're reconciling. Now, let's talk about the date. So if we are currently in the month of April, so prior to 25th of April, you're required to reconcile 28th of February. So if you need to reconcile 28th February, you need to have 31st of March, my bad. So right now in April, You need to reconcile for 31st of March in. And then once you're reconciled, you would be able to post that into your respective folder, or you need to submit it respectively. You would be able to do that. You have the date as per the bank statement, you also the balance, and then you clear the transactions that you only see on the bank statement. And then you would be able to see the reconciliation button scroll up on the top. Okay. We also have, on the other hand, when all of the three checkboxes that you see here are done, step 1, step 2, step 3, then you'd be able to see the reconciliation button showing up in blue. Once you reconcile, you'll be able to complete the activity. Moving on to the next slide that talks about reconciliation. How can you catch some of the errors that you're probably not able to? It makes sense in the face of it, right? For example, you'd be seeing some transactions that's not even part of your bank statement, but sitting in there. It could be that you've mistakenly, first of all, look at the dates. The dates should be matching. If you see any transaction where the dates don't match, then you will have to work out on the date. Go either forward or backward. Look at the bank statements, and then it'll make sense. You'll be able to arrive at the date, right? And if it's not the date issue, the other thing would be I've commonly seen is on the general account between the general and the credit card. So you could then swap the account and check whether it's vice versa, whether it's part of the trust, general or the business credit card. And then you can check into that. Lastly, if your accounting system is up to date, you've entered all of the transactions, it really means that you're audit ready, because you should be able to record the transactions on a regular basis. Then reconciliation, like I said, is few minutes away. And then you should be able to easily complete all your boxes, check boxes, and then you can move with producing the documents to either Law Society or CRA or your accountant for that reason to complete your books, your taxes, and go from there. Now, the other thing as part of the reconciliation is that you're able to catch any issue at this time. Like I said, the bank errors or any other transaction that was to be entered in the trust but entered in general or vice versa. and you'll be able to understand whether these bank transactions belong to this particular account or needs to be swapped. So you have a month or little less than a month to do all of those, because let's say it happened early of March and you got this particular issue while you are in the March month, then it doesn't appear anywhere in the bank error. So it doesn't even go into the bank error field. So in order to be able to catch all the transactions, obviously you should be able to do an interim reconciliation, or you should be able to go over the transactions, see if there are any errors, your balances don't match with the bank and uLaw or any other practice management that you're using, then you should be able to complete it then and there. If you miss to do the interim reconciliation, or if you miss to see that, that is when it doesn't happen within the same month, then it's shown as the bank error. Oh, talking about one second, other reconciliation or compliance documents. Um, so by reconciling doesn't just mean you're always audit ready, right? Yeah, I mean, most of the stuff is taken care when you're reconciled. But now, how accurate are these data is like decided by looking into further information which are presented in the format of ledgers and journals. So not just those reconciliation documents speaks, but there are some of them beyond reconciliation, which is part of your monthly Law Society compliance documents. This includes two ledgers, which is known as client's trust ledger and client's general ledger, showing both deposits and withdrawals into the respective bank accounts. Of course, it will contain more information as to who is the client, what is the amount, and what date you received it, and such things. So a little bit more drill down version than just the reconciliation, right? Obviously, reconciliation shows the most important part, which is whether it's matching your books or not. And the next one here talks about journals. Journals is more drill down version of ledger, because obviously journals will show you more information on whether it is whether who's the payee, who's the payer, who's the and also some other comments. You will be able to see the description, payment methods, and other things, right? Like it's a little bit more drill down version, like I mentioned. So you're able to see more items, you're able to see more information. Your auditors are able to confirm what is the issue, if there's anything that is mismatching, and all sort of stuff. If you look closely, we also have Form 90s, which talks about electronic fund transfer requisition form. And then comes into picture the checklist. There's an overall checklist, and this is incredible because you're welcome to take a screenshot, but what does this have to do with, you know, getting ready for a law society audit or being able to reconcile in minutes? Now, everything is part of the reconciliation process, but the typical thing about maintaining the records starts right through from the time you intake a client. So when you intake a client, there are these bunch of documents that goes through, whether it's conflict check, virtual verification, like retainer letters, source of contacts. So these are also a part of the Law Society compliances at contact management level or contact matter management level. Now, post that comes into picture where you kickstart the retainer letters, and then you have the retainer in, you provide a retainer receipt, then you are during this process, you're able to enter all the required information, the date on which you received the retainer, the day amount, the reference numbers, method of payments. In a flow, while you record these particular transactions gets into respective documents, which also not only just captures the information, but in turn provides the data that needs to be reconciled. So it is a step-by-step process that will lead to a smoother reconciliation process, right? So whether you have some reports as invoice balance reports, when you click on it, you know that you have any missing trust transfers. Okay, for example, you are in the process of trust reconciliation or general, whichever ones. Somewhere you're not able to understand the difference, right? Like, let's say there's more or less of balance, and then you're not able to arrive at the numbers. And that is when you have this invoice balance report that will show you if there are any pending trust transfers, or if anything needs to be paid out from trust, if anything needs to be brought into general, any outstanding from the clients. These are things where you would get to be able to see what is really needed. So some small reports that contributes to go a long way. And on the other side, we have when you're getting paid into trust, you know that these are for disbursements, or these are only for the general account purpose. The disbursements comes out of the general account, or ensuring that you are not overdrawing anything from trust. Because if you are getting money into the trust account, you might as well make sure that whether it's only for your legal fee, or it's for both legal fee and disbursements, or you're going to get paid in, you're going to pay for the general out of your disbursement, and then, out of your general account, and then you get paid back into the general directly by the client. Again, it depends. It totally depends. So based on your practice or the method that you're adopting, you'll be able to raise an invoice. Then you also have, when you're getting paid into the general account, ensuring that you've raised invoice for the right amount, and then you're paying disbursements from the general account, tracking all the disbursements. Similarly, when you're planning the fee structure, you have and consider the retainer, and then the balance goes into your general account, because once you've completed the invoice, you get the amount transferred from trust to the general, and then the remaining funds, if you have any outstanding from the client, at that time you can get the money into the general account. So make sure that raising an invoice is in a timely manner, and understanding what is outstanding and highlighting that to the client, and ensuring that they pay directly into the general, because again, there's a hassle of bringing the money into the trust and then transferring them, ensuring that it's exactly the outstanding amount. You can avoid that and highlight, saying that, hey, why don't you just transfer on the trust, or into the general instead of trust, unlike last time, that was the retainer, this time it's a payment. So you're welcome to put it into my general account. Here's my general account email ID. A little proactive things might save you some time and steps, and reduce making errors, right? So you might capture all of this information and relatively work on it, which does help you to save time, money, and, like I said, be error-free. On the other hand, you also want to make sure that capturing disbursements as you incur, whether it's paid out of trust or general. If it's paid out of general, there's an additional step involved in there for you to ensure to collect the funds and reimburse the firm, whether you're getting it out of trust into the general, or getting it directly into the general from the client. you follow up and get into that with your client. And also, on the other hand, is raising invoices in a timely manner, ensuring that it's all the disbursements, retainers, flat fee or billable time, and also whether any tax is included or not. You're addressing all of it. Just going to quickly pause here before I move on with the handling trust account with the documents. If you have any questions, please do let us know on the chat window. Kindly use the chat window at any time to ask any questions. Okay, thank you. All right, so handling trust account and required procedures definitely includes the ledgers, the journals, the trust receipts, disbursements, Form 9As. When Form 9As, if you're Ontario-based and you're transferring funds from trust to the general electronically, you're required to generate something called as Form 9A or EFTR, which is electronic uh, fund transfer requisition. So once you have moved the funds from Treasury General, you note down the requisition number and enter that into the program. So that would generate a Form 9A for you. And that is part of the monthly compliances. You're able to also track down to ensure that each and every, so you can check whether each and every requisition has the number that you can verify to, compare to, and that you're able to generate these from time to time. On the other hand, when it comes to general, you have the general ledger, receipts, disbursements, fee book, expense book, and more. Okay. Now, I know that we spoke a lot about trust and general reconciliation, talking about maintaining ledger, journals, receipts, fee books, and when you're capturing discounts and all the information that shows up in the respective accounts and documents. How much time are you spending managing all this? It's a big question, as I mentioned. It depends on area of practice. It depends, like, for example, a real estate lawyer spends more time in comparison to any other because obviously they have more disbursements, they have more formalities to complete. But on the other hand, it could be simpler if you're using the right set of tools. Now, it depends totally, right? Like the volume, the transactions, like even you take a paralegal with traffic tickets, you might have hundreds a month. And if you're very successful, and let's say you have so many in a month, and you have to enter the filing fees, the rates, the taxes, invoices, retainer, receipts. When you're doing this in a very due diligent manner, it's going to take you a simpler process. It's going to make things simplified. It's going to help you to reconcile the books faster, save time, prevent errors, and the reconciliation is straightforward and simple. While on the other hand, you don't have enough data entered, you don't know how to compare which invoice to be compared to, which to be matched to, right? You don't record data as and when it happens. You don't follow a workflow. Then it could be a little miserable than we think because it's again going to zero down to what is needed, right? So if you are looking for automatically maintaining your ledgers and journals, this is the best time for you to start recording the data as and when it happens. I think that is one of the first step towards beginning a successful reconciliation journey. How is reconciliation going to help all of you? Why reconciliation in first place if we have all these ledgers and journals that anyways captures the information. But of course, end of it is reconciliation that ensures that the balance in your bank and that of your books that you've explained here matches. Catches all transactions that you've made in your accounting system that you've entered here. If that do not match, then that's exactly what goes into your reconciliation process, and it's found that right there. So it catches all the bank transactions that we've sometimes missed to enter, missing transactions, keep it error-free, and then that would help you keep your books up to date and your audit ready at any time. Analytics out of your accounting system helps you to be audit ready, helps you to be ready to file your taxes with CRA at any time. See many people work on their annual report filing and annual taxes filing very rigorously towards Feb, March, while, if someone could do this right through even Jan, like as soon as the year is done, pull it out, send it to their accountants, get it done and more. It's really much simpler there. And again, all available in one click. Just have to be able to download, put it in your respective folder, and then move on. Just a few minutes and you're done. Again, when I say a few minutes, it depends totally on your area of practice and volume. But compared to whether you have a set process or not, it definitely takes much lesser time when you follow the process. And all of this available under the legal accounting software, obviously, because you're able to record the events as and when they happen. You're able to add dockets. You're able to raise invoices, add retainers, add disbursements, transfer funds to the EFTs, do Form 9As, maintain your financial records and bank records absolutely matching. And it's similar because you work on it as and when it takes place. So obviously, it'll look simpler and definitely easier to keep in compliance and helps you with analytics and more. So for someone who doesn't use a program like uLaw, highly recommend it. If you are here today and you're not a uLaw user, I would highly recommend you to register for a free trial and benefit out of it. just, to showcase everything that we spoke over the last few minutes to all of you, I'll be using uLawPractice, but if you have any questions, you're welcome to add it into the chat window so I can walk through specific scenarios, starting off with, contacts is where you would add in a client, and then matter is where you would add in dockets, you would add in disbursements, you would add in retainers, you would be able to generate receipts. So you have the transactions. As you go ahead and enter the transaction, you would have the reference numbers, you would have the receipt details, like you have receipt from. So you can just click on receipt and generate it. And once you generate, the receipts looks very similar to what you see here. So if you look at this, a settlement statement, there's a trust plus general, and we also have a Form 90, and all of them are available readily. We have invoices, receipt for every retainer paid, very clearly says a $300 retainer, and it very clearly says new retainer, the reference number and amount, client and other details captured. Then all that the client has to submit, sign, right? Very similar to that, we also have a payment receipt. So there's a retainer agreement. So all of these are on records. Just need to enter them. As you enter, you produce the documents. When you're in accounts, you also get to do the reconciliation for all the details that was recorded today. You click on reconciliation. If it's trust, you click on trust. If it's general, you click below that. And if it's credit card, you click on general, and then you have an option to click credit card also. So you see there's a enter date, and you enter the balance, step 2. And then you start clearing the transactions that you see in the bank statement. In the bank statement, you see a withdrawal, and that matches, check. Deposit matches, check. The unchecked boxes are nothing but outstanding deposit and outstanding withdrawal that will eventually clear. Maybe it would have cleared the very next day, but the month closes, so you're doing the reconciliation, and hence the reconciliation button pops up in blue. So important things to note here is the date. You select a month in and enter the balance, clear the transactions, and then your reconciled and unexpected balances as per ledgers matches, and then you will be able to see the reconciliation. If there is a difference, it's an outstanding deposit or withdrawal that you will be seeing. We also have this particular way where you could do the reconciliation under accounts for the general account as well. We have it right under accounts, under reconciliation, general. The only difference that you would see here, general, you also drop down, you would see credit card. Okay, the only difference that you would see is general doesn't have a banker field, but it's the same. You would see a trust, and then you would see, you would see a date, step 1, and then you would see the balance as per bank statement to be entered, clear the transaction, and Whatever outstanding, you'll leave it as outstanding, and then you will see the reconciliation button popping up. Okay. And once you close this, you can actually drop down to shift a credit card. You can do the same thing with the credit card. While you're done, you can click on compliance, monthly compliance, generate rest of the documents. Let's say today I would like to see the client's trust, whatever was generated for today, download it. We get to see the ledger captures information as date, the reference numbers, type of transaction, amount, clearly also what is the reason, which is particulars. On the other hand, if you go into a journal, let's say I'd like to see my client's trust journals are more detailed version. So you get to see receipts and payments separately. Okay. We get to see for just the receipts, more detailed version. We're including the purpose of the funds, whether it's a retainer or whether it's other trust deposit, and the source of funds too. So these come, and the method of payment. These come in separate columns, so you're able to track down information, especially if your auditor is looking for so. Go back in there. You also get to see Form 9As. Today, if I have generated any trust transfer, you get to see them here. Then you get to see the requisition number right on the top. So it's important for you to transfer in the bank first and then enter that over here. And it tells you the debit bank address was debited from your trust and then was credited into your general bank account. Then one of the important things is you download and sign them. You don't have the time for it. Make sure that you go into help, you click on personalized signature and enter them. So very recently when I attended an audit for the Law Society, I was informed for a client, I was informed by the auditor that, you've generated the Form 90s and it looks good. Everything is great there, but we are not able to see the signatures. So signatures are mandatory and make sure to add it as a personalized signature. So it just gets downloaded onto this PDF with the signature, right? That is more important. So you know that there is a way that you could get it done simply than download, sign, and upload it back in. All right. I think that's almost to the end of the session. If you have any questions, I welcome you to enter it on the chat window. But in the meantime, I'll be sharing today's details, webinar details, and also a few useful links. Please do let us know if you have any questions. And as mentioned, today's webinar is being recorded and it is available. It will be available on our YouTube platform as early as Monday. Once again, thank you everyone for joining in today. Kindly hang in there until I provide the details on the chat window. And please use the chat window to ask any questions too. Thank you. I'm entering the details. You need to click on the link for CPD attendance, and also please make a note of today's topic. Yes, you just need to get on to your respective Law Society portal and enter the CPD name, and you should be able to get avail the credits, especially in Ontario. I am copying, or rather entering a few more useful information and links for you on the chat window to copy. Kindly make a note. There are links like free trial, our Instagram page, social media page for more updated videos, features, promos. We have refer a friend promo running. I'm also going to share that link here. There are a few blogs that we keep writing. I'm going to share a couple of blog links for you to go and read about Bank Connect, some new features, speech to text, AI tools, delete invoice. Please make a note. And I'm also going to share a referral link in the last. So if you have any friends who might be interested in trying or exploring uLaw, please refer them. You don't have to, you can register on behalf of them if you've already spoken to them. And you don't have to reach out to us. You just fill out this link and we'll reach out to them directly. Oh, also that you get a referral fee, $50 gift card for every referral that's made. So please to use this link to refer any friend. So we don't miss out on referring or rather giving the referral fee. Thank you so much, everyone, for joining in today. I really appreciate taking the time off your work. It's about an hour every time, every Friday, especially in the afternoon. It really means a lot to us. Thank you so much and have a wonderful weekend, everyone. Look forward to talking to you next week. Thank you so much.